This is our market view presentation. We are grouped up by Yiyao, Weicheng, and Sirawat. To introduce ourselves, we are banker. As a price maker, our goals are making money by trading currency and investing money in the next 3 to 6 months in foreign exchange market.
This report will analyze and discuss market view in relation to Australian dollar and US dollar, and Great British pounds and European currencies. The interest rate, exchange rate, inflation, and growth rate of these currencies will be reported, analyzed, and discussed. In this slide, we were talking about Australian and United States interest rate. On April 3rd, RBA decided to leave the cash rate unchanged at 1.5%. The RBA has kept the cash rate at a record low of 1.5% for 18 months in a row, citing a range of factors that are dampening the inflation outlook, including weak wage growth, more rebound consumer spending, and high levels of household debt that all makes tighter money policy challenging. Keeping the cash rate at a record low of 1.5% is a double-edged sword, as it has advantages and disadvantages. This decision has a bad outcomes to overnight cash. It will still lead to the increased capital outflow, so there will be increase in the supply of the Australian dollar. However, the nominal rate decreases and the interest rate is constant. The result is that Australian dollars will be expected to appreciate against the United States dollars. The Australian dollars rose from 0.7685 US dollars to 0.7716 US dollars at the day after the announcement of the new interest rate. On the other side of the United interest rate is 1.75%. It has been stable for a long time now. It is very large economics where almost the economics depends on it. The United States economics are very fast-growing economics. The new announcement will lead to the economic growth in the Australian currency, will lead to the increase in the imports, which result to increase the supply of the Australian dollars and may increase overseas borrowing and increase finance investments. GDP in Australia expanded 2.4% in the fourth quarter of 2017 over the same quarter of the previous year. GDP annual growth rate in Australia averaged 3.47% from 1960 until 2017. The GDP in the United States expanded 2.60% in the fourth quarter of 2017 over the same quarter of the previous year. GDP annual growth rate in the United States averaged 3.19%. In conclusion, the United States GDP is going up from 2016 until now. However, the Australian GDP is not stable from 2016. For these data, we could see the United States has a better economics rate and environment than Australians. In this slide, we're talking about Australia and the United States inflation rate. Inflation rate in Australia rose 1.9% through the year to the December quarter of 2017, following a 1.8% rise in the previous quarter and compared with the market consensus of a 2.0% rise. Cost of housing and transport increased at a faster pace, while cost of the food fell much less. Inflation rate in the United States increased 2.4% year-on-year in the March of 2018, above 2.2% in February and matching market expectations. It is the highest inflation rate in a year, mainly boosted by the shelter and used car prices.
The interest rate in United Kingdom averaged 7.63% from 1971 until 2018, reaching an all-time high of 70% in November of 1979 and a record low of 0.25% in August of 2016. The interest rate in the euro averaged 2.03% from 1998 until 2018, reaching an all-time high of 4.75% in October of 2000 and a record low of 0% in March of 2016. British pound interest rate increased from 0.25 to 0.5. Compared to euro, the interest rate is stable, which is 0 from October 2017. As a result, the UK will decrease import and supply of the British pound will decrease, but euro area will increase export and increase demand of euro. In other words, British pound would be expected depreciation. In terms of euro, investor would more likely to invest in euro as the euro goes price related lower. The British economy grew by 0.4% on quarter in the 3 months to December of 2017, following a 0.5% expansion in the previous period. The Eurozone economy expanded 0.6% on quarter in the 3 months to December of 2017. Growth was mainly driven by export and fixed investment, while household consumption increased at a softer pace. From both countries, it can be found that there is a better economic growth. In addition, better economic growth will attract investors to invest the currency. Euro may be more attract investors as a higher GDP growth rate. The rate of inflation across the UK fell to 2.7% in February 2018 from 3% in the previous month and below market expectations of 2.8%. It was the lowest rate since July last year. The Eurozone consumer price inflation is expected to 1.4% year-on-year in March 2018 from the previous month, 14-month low of 1.1%, and in line with market forecast, price of service and food, alcohol, tobacco should rise at a faster pace. For both, the economic is recession and can be result decreased purchasing goods and investment, but unemployment will increase. In conclusion, although euro is cheaper than British pound, it may cause by deflation. As a result, investors would more likely to invest in British pound.
When the Reserve Bank intervenes in the foreign exchange market, it creates demand or supply for the Australian dollars by buying and selling Australian dollars against another currency. The Reserve Bank almost always conducts its intervention against the United States dollars, owing to the fact that liquidity and the turnover are greatest in Australian dollars or United States currency pair. The Reserve Bank has the capacity to deal with in foreign exchange markets around the world and in all time zones. The Reserve Bank has generally chosen to intervene by transacting in the foreign exchange market in its own name in order to inform participants of its presence in the market. If the Reserve Bank chooses to solve any resulting effects on the domestic conditions, foreign exchange intervention transactions can be restricted through offsetting transactions in the domestic money market, or has been typically the case through the use of foreign exchange swaps.
Our trading strategy is to buy the bid rate and sell at the offer rate, and we try to maximize our profit as much as we can by giving the lowest offer price and highest bid rate to compete other banks and corporations.
In summary, we are a banker trading currencies with other banks and corporations. By doing so, we have to expect the future currency changing by looking at interest rate, GDP, inflation rate, and government intervention. In interest rate, AUD will be expected to appreciate against USD, and the British pound will be expected to depreciate against euro. In addition, in recent years, America has better GDP growth rate comparing with Australian GDP. For United Kingdom and Europe, Europe has a more stable GDP than United Kingdom. Government intervention will have a huge influence in money markets. Thank you.